Hi everyone. So today I'm going to be talking about how we can use the opening prices to frame the narrative and determine premium and discount. So firstly, these are going to be all in New York time. So we open up at midnight New York. This is a key reference point throughout the day. So if you're above the midnight opening price, we're in a premium, and if you're below the midnight opening price, we're in a discount. That is the general rule of thumb. And we have three key opening prices: the 8:30 open, New York time, the midnight open, and the 9:30 open. 9:30 is the RTH regular trading hours, New York open, and but our main two key reference points are 8:30 and the midnight open that we're gonna use the throughout the day. So yeah, so basically this is a consequent encroachment of a wick, a discount wick on the daily time frame, and then from there on we started moving higher. This is the 3:30 hour key heart of London. Then we keep going up higher, and this is the New York session open. Just 1 second. So this is the New York session open, right? So what happened prior to New York session? We were in a consolidation. We built up those relative equal highs right here. This is a strong retail resistance, but we do not care for resistance or support. We do not trade that. I do not trade that. So we built up sales. So we grinded lower. Then at New York Open, we had a push higher, and then we went into consolidation. We built this short-term buy-side liquidity, minor buy-side liquidity pool, and then right in advance of the 8:30 news. The 8:30 news driver is either will either be utilized to manipulate or to distribute. What happened right before the news driver? We took out this buy side. We were in deep premium. Where are we in relative to the midnight open? We're way higher here, right? So where are we? In a deep premium, right? We do not want to be buying here. We only want to be selling short at this premium. At 8:30 open, we went up higher, wicked above, and then closed below. Then we went down and we started accumulating shorts order. Inside this reclaimed SIBI, sell side imbalance, buy side inefficiency. It's a reclaimed because we went up higher, we went down lower, and then it's originated back to its original function, that is being a SIBI, that is going to act as resistance to price. Mhm. This is a sell side objective, liquidity, a minus sell side right before the pre-market. So I'm going to take that sell side as pre-market sell side. And okay, okay. Now where are we in basis for time, right? So the 8:30 news driver, what did it do? We've already manipulated higher. We have already had the news driver. We started grinding lower. We created this fair value gaps right here. This is a breakaway gap. We started accumulating shorts. When does price start moving? What time is it? 8:50. 8:50 macro, right? So this is time meets price. So this is how you can align time and price. What does a macro do? It either expands or it reverses. It is utilized for going manipulating price and forming a reversal, or it's either used to expand if you've already done the manipulation. So your job is to recognize the manipulation and create the distribution. So since we've already manipulated, we've done the work on buy side. We started just dumping straight lower. We have these big candles. No, as you can see, there's barely any up candles throughout the run. Uh, Lower. We came back all the way till here, and this is what time? 9:06. Where do we stop right in advance of this discount awake, right? What do we start doing? We start going into uh, sort of consolidation. This is all time distortion. For what? What time is it? 9:30 open, right? 9:30 opened. We went lower, stopped right in advance of this sell side. What is this? A fake out. And we formed big up candles. This is what? A breakout. So we trapped retail short, then long, and then into the fair value gaps. This, this is a SIBI, and then there's like this is also inefficient as well, right? If you go into like a high time frame, 2 minute, 3 minute chart, let me just go. For example, if I open up a 5 minute chart, this is a SIBI in the 5 minute chart, and then let me just go back to the 1 minute. So this is all inefficient. just a sell side delivery. So we start delivering some buy side into that. We can see the failure to displace above this volume imbalance, and the SEBI is signaling to me that okay, price wants to go lower, take out the sell side, go below the midnight opening price in a discount, right? So we go, we have good heavy candles. This is all manipulation. This is all manipulation. This is all straight manipulation. And what are we doing here? We're building the sentiment that okay, we've already been heavy since the pre-market. We took out this, and then we going back down, right? This is the narrative that's being built in. This is a heavy manipulation below the midnight opening price into the lower quadrant of the wick. You can see how we have a failure to even touch the discount of this wick consequent encroachment. What is it signaling to me? What what is price signaling when it fails to even touch a PD array? It has a failure to even come back down to touch this. That is really, really strong, right? And London took out, ES took out the London lows, but NQ failed to do so. So that is SMT as well. If you can go into your ES chart, you can even see that. And then what do? We have a strong displacement towards the upside. We displaced to the midnight opening, and then we went up into the first presented fair value gap. What is this? This is the first presented fair value gap of the day. And what time is it? This is the 9:51 macro. We come back down once into the breaker block. We even fail to touch the midnight opening price now. And then what do? We start going back up. What do we form? Breakaway gaps. So price is showing to me that we even have unwillingness to come back to reprice to these gaps. These are just leaving them open. So price is really, really strong. So inside the first presented fair value gap, we go up, we come back down, touch it one last time, and then we just blast off. Where do we blast off to? What is this? Buy side liquidity from when? Pre-market, right? You can use Fulcrums to project where the price will go to, because if you project this whole range and you do a negative 0.25, you will see where the exact high formed. I'm not going to do that right here, but you can go into a chart and do that. So this was it for today, guys. Thank you.